volume's good, picture's good. You should be able to see the disclaimer, which everyone hopefully has had a chance to read. Let's just flick over to our presentation. Now, this is kind of part two of a two-part presentation. I'm going to cover what we did in the morning briefly, and then we'll go through and have a look at exactly what we want to cover tonight. So welcome everybody. For those of you, there's a couple of new people. So my name's Shane Fry. I'm the Director of Coaching and System Development for GMT Futures. Obviously, this is one of our Pro Trader sessions, and it's good to give people a bit of a look at what we're doing, obviously. I guess the exciting part for us at this point is that we're going to be talking about our top 10 systems, but we're going to be talking about new systems, the Viper strategy, which is a brand new system we're releasing. We've also got, I counted today, we've got 4 other systems that we're releasing in the next 3 to 4 weeks. Now that might seem like a lot of things going on and a lot of systems, but the reality is we've been working on some of these strategies for over 12 months. So they're not really new because we've previewed them in the room before, we've spoken about them, and I'm going to be talking about those a little bit tonight. So the exciting part is getting them to a point where we can release them, which is fantastic. So some of those systems, obviously we're talking about the Viper tonight as part of our presentation. We'll be previewing that. And remember that when we release a strategy, the key rule always is simple is best. So we want our systems to be as simple as possible, because the reality is the simpler the strategy, the easier it is to manage. Usually the more profitable the strategies are. You just have a couple of key elements. It really comes from you picking the right market, you managing the strategy properly in automation, and managing the market dynamics, because it's the same as any system you trade, or a lot of systems you trade. If you're not aware of what's happening in the market you're trading, and you try to trade a strategy that just doesn't fit that market, or doesn't have the scope for the volatility that's in that market, you're not going to do well. So part of the process and part of what we're going to show you tonight is you've got to really know what market you're trading, and you've got to have a feel for what's happening with that market dynamics. So some of the systems we're going to be releasing over the next month will be, we've released the Viper strategy to our members. The failed trend, which is very exciting, that's one that's going to make a huge difference to a lot of portfolios. That's a much awaited strategy. The pivot trader, which will be out kind of this week, that's a simple but really, really good little system. The GMT MACD trader, and our revised cycle. Now the revised cycle strategy, I'll show you a little bit of that tonight. We've seen it a few times. It's just a slight change on our cycle trader, and it's going to make a big difference too. So a lot of exciting things happening within GMT, and the goal is always to get better and better strategies to help you make more and more money. So that's where we're headed. So very exciting. Obviously we've got a couple of new coders on board, so that's meant that the process is really kicked on nicely. So it's fantastic. So guys, let's get into it. As I mentioned before, when I go through this presentation, we're remembering too that the whole concept of this is that we're trying to build a multi-system strategy for our traders. The GMT pro traders, you're always looking to have that multi-system strategy approach. As we mentioned this morning in the presentation, the goal is to get multiple systems within a single market or multiple markets. That's really your target, or your goal, your outcome. Now, obviously at the moment we've got a number of strategies we use, and we're going to add to that library, which is great. But above everything else, as I mentioned in the introduction, you need to know about the market. You need to have a good market knowledge about this market you're going to be trading. It's no good going into markets that have got thin liquidity, very low volume, and trying to do really well when you're trading markets that aren't going to be in your favor as far as volatility, liquidity, and volume. So it's important, if you're going to look at trading, whether it's futures or forex, that you do your market research. One of the things we recommend is obviously that market profile report. That gives you a basic background to what you need to know about the market you want to be trading. And then obviously the next step for that is tracking market conditions. You need to make sure that whatever market you're trading, you're tracking the conditions in that market, because if suddenly you've done all this testing over 3 to 6 months and your market conditions change, your system really, particularly if it has a dramatic change, your system may be useless because you've optimized or created a strategy that suits certain market conditions, and if they change, then it means going back and looking at how you can manage or recalculate or reconfigure your strategy. So the solution is always to us is knowing your market conditions, being aware of the market profile, but also having multiple systems, multiple timeframes, and multiple markets. Now, and we spoke about correlation today. So obviously, if you're a Forex trader, you're going to be really looking for and watching that correlation between, currency pairs. But I've got this question to ask you. If you've got say the euro, pound US dollar, and the euro US dollar that are highly correlated, can you trade those two markets with two completely different systems and still avoid that correlation? Absolutely. So really it comes down to, even though you might even be trading the euro US dollar, but having three completely different systems, one trend, one say counter trend, and one say reversal strategy, or one cycle strategy. So you might have a trend, cycle, and a reversal. They're going to all work differently within that market. So that's the huge advantage with having that multi-system strat. And when you're looking to, obviously, as our traders are, looking to get exposure to capital to trade some of the capital that we have on our emerging managers platform, the key there is making sure you've got markets that are scalable, and obviously that offer good volatility, good volume, and that you're able to put multiple systems into. You don't really want to be trading markets that haven't got that ability to scale up within contracts and strategies as well. So our top 10 systems, we're going to have a look at our top 10 strategies here, and we're going to have, I've just grabbed a couple here that we want to have a look at, because one of the things that we want to do as traders, obviously, is make sure that we're managing our portfolio. Now, as I mentioned before, whenever we're looking at systems, we're looking at making sure that we have, if we've got the capital base, a multi-system strategy. And I'm going to talk about that, and I'm going to talk about why that's so critical with our systems. And we're going to have a look at some of the strategies that we have here loaded up, and we're going to kind of assess them based on what we consider to be the most important factors, and I'm going to give you a bit of an insight into why I've picked some of these strategies as our top performing strategies. Now remember that when you look at an equity graph and you're looking at performance and you're tracking something, you're obviously going to want to see overall profit. But the other thing that we're always looking for is obviously that drawdown element. Now if you look at these ranking of systems, if I purely rank these based on overall profit, which most people are attracted to immediately when they do their analysis, they'll say, right, well, what's the most profitable strategy you have in your list or within your organisation? And we would say SN391 has been by far the most profitable on our data that we have. Now remember that because we trade in TradeStation and we track our data gets loaded into this, what we call our Portfolio Manager Elite spreadsheet. That tracks our weekly data. Now, one of the things with TradeStation is once you make a change to TradeStation, the performance report, and I'll give you an example of that. I've got a strategy here loaded up. This is the Viper strategy. Now, I've got this strategy running, and it's only trading shorts at the moment. It took a trade tonight or this afternoon. Now, what would happen if, for example, I had this system and I suddenly tomorrow decide, right, well, look, I like how it's running, but I want to get in a little bit earlier. I want to get my entry in a little bit earlier, because that to me is a little bit too late on my entry. what would happen to us if we suddenly have all this data loaded into our spreadsheet, which is tracking the performance of this system? Because every week we're tracking the performance of this system based on our trade list, what trades it took, how much it made, what was its performance. Now, what would happen if I make one change to this system? If I change the entry rule for this system, what's going to happen to the overall, this trade list here? It's going to change the data completely, isn't it? So what we've done is we've said, right, well, because TradeStation doesn't allow you to capture up to a certain date and then lock that date in, and then for all data going forward from that date, I don't think there's too many platforms that do, but so what we've done is we've said, right, well, we want to capture this data, so we've got our data, our historical data. Then any trading data going forward, we're just adding that to our data list, and that's what we use our PME for. That gives us the history of our trade data, which is critical. So if I make a change to that Viper strategy, then I am able to go back into my trade list, drop the data in, and if I change it for today, say for example, if I change it and the next 5 trades I can load in, and I've still got that history of what happened previously with my trade data, and it just means that I've got that continuity, and that's critically important when we're tracking our systems. But as I was mentioning before, it's really critical when you're looking at your system and your portfolio to make sure that you've got that ability to track your systems. So let's get back to coffee. So we were speaking about coffee. A lot of people are attracted to the profit on coffee, but one of the key things that we're looking at as a group and as a team is we're always looking at what's one of the most critical things for an automated strategy to have to maintain its robustness in the market. What is one of the absolute most critical things if you're looking at a strategy and you're dissecting the performance of a strategy and you're seeing whether, right, well, how is this system going to stack up in real time? Is it going to be, is there enough in this system to make money? What's one of the key benchmark stats when you're looking at your performance report that tells you that there's, because obviously net profit, that can be a bit of an illusion. It can be a panacea that people get attracted to, but doesn't necessarily fulfill the requirements that system trading necessitates. So what is the one thing that you absolutely have to see when you're looking at your system? Something that you need to have as a benchmark. You need to have that average trade net profit. Now, for our group, it's $50. If that average trade net profit isn't above $50, then I'm not really even interested in looking at a system. So what I've done today is I've loaded these strategies up based on profit. Now, profit is critical as well because we need to make sure there's enough money in the system to trade. But the other thing too is we need to make sure that the average trade net profit, when we turn the green light on our strategy, that we're going to be making enough money, because one of the traps with any type of automation or any type of actual system, whether you're manually trading it or you've got it on automation, is that if you don't know what your average trade net profit is, then you could quickly become a statistic that is obviously on the wrong side of the trading success story. So you want to make sure that average trade net profit is as high as possible. $50 would be a minimum. The higher the better. Now the other thing too is that we want to make sure that this ratio of profit to max drawdown. Now obviously coffee far and away is the most profitable. It's actually, since we've been tracking and trading this strategy, it's made over about 70k. So 66 would be kind of the low end of what that strategy's made. And we've got a whole bank of coffee strategies that have made, anywhere from 20 to 70k. So there's a lot of, but the downside to coffee, and we're going to show you this very quickly. What's the downside to this coffee system? Now, obviously, there's always a risk in trading, and there's always a risk in trading bigger systems. There's a couple of things that are going to stop us from really taking this coffee strategy to the next level. What would those two be? Now, obviously, there's always a risk in trading, and there's always a risk in trading bigger systems. There's a couple of things that are going to stop us from really taking this coffee strategy to the next level. What would those two be? What would those two be? Because when you're looking at your portfolio and you're thinking, right, well, I want the best start I can get. I want to make the most amount of money I can make. How do I get there as quickly as possible? But really, I'm trying to manage my risk as well, because I know that my outcome is to get on the Emerging Managers platform, trading as much money as I can, but I need something that's scalable. That's right. So Kim mentions here, it's not scalable. Coffee is just not a scalable commodity. You're going to struggle once you get to 10 contracts, unless you've got a multi-system strategy, which we do. But the thing is that you've got to have that scalability on your market. The other thing is the large drawdown. The large drawdown is really going to, if you start that with a smaller account, say a 20k account, you could potentially hit that drawdown straight away. So that strategy is good if you've got money in the bank. If you've got profit you've got profit. You're turning it on when the volatility's up, when the market's moving. It's had a fantastic week it's had a fantastic couple of days over the last few days where it's made 3 to 4k. But you want to make sure you hit that when it's actually when the volatility's on, and not when the market's starting to get a bit choppy or range bound, because that drawdown can happen fairly quickly. Now, the other thing that we want to do is we want to make sure that when we're looking at adding a strategy, we want to make sure that we've got a ratio. The ratio of profit to max drawdown. That max drawdown is almost $8,000. The profit's 66. Where does that doesn't sit very highly on our ratio of profit to max drawdown, does it? It's actually not as good as we've got there, because we've got one there at 13.5, which is SN312. So there are better, and 13.6 on the Eurobond. So there are better ratio profit to max drawdown strategies than that. So when you're constructing your portfolio, that's one thing to consider. Now, remember that our goal is to put a multi-system strategy together. So if we had every single system on here, we add in coffee, what's the likelihood of coffee taking our drawdown to around about, remember the max drawdown on coffee is 7814. So if we did have a 100k as a portfolio, so we'll change that to 100k, and we wanted to include coffee because it's one of the better strategies, where do you think our max drawdown is going to sit once we add coffee into our portfolio with our profit in here? Because our current drawdown, all systems being traded except for soybeans and copper, our current strategy is, or our current portfolio with all those systems running, is around about $28.69. It's almost $3,000. What's going to happen when I put in coffee as a strategy? Do you think our drawdown is going to increase, get to 7k? Because it is at 7. The actual coffee drawdown alone is 7814. So are we going to be looking at 11.5, 12k drawdown, or are we looking more at a reasonably low drawdown? Let's have a look and see what it does. So we added coffee in, and our drawdown. So let's just review that again. We've gone from almost $3,000 drawdown, and we add coffee in, to 5.5. So by having that profit, or by having that performance in the portfolio, and then bringing in a strategy like coffee, we're able to add in potentially 66k of profit if things continue as they are, and this trades the same over the same period. And our risk is minimal, and it's still within the max drawdown mandate. Because remember, our max portfolio drawdown is 9% a month. So the max drawdown we could potentially have in a month is 9%. So we're at 4.1. That's fantastic. So the largest system drawdown on its own is 7814. Our max portfolio drawdown 4.1. So again, it just comes back to, now the coffee strategy, it's a strategy that obviously is a larger system, and that would be bought in when you've got that potential profit in your account. Now, some of the other systems that I've been looking at and that I've selected here, the obvious ones for me, particularly on the smaller accounts, if we go through these, B44. Now, you're trading a 10k account, you're running the Eurobond, you've got a breakout strategy, 51%, max drawdown is $570. Really pretty hard to go past that. That is a super result. The ratio of profit to max drawdown, 13.6. It's the highest ranked profit to max drawdown. Look, it's not producing 66k, but on a smaller account, that is a fantastic result. So that's really like you 77%. If you're actually running this for the Emerging Managers platform, and you've put together 9 months of trading that has returned a very low drawdown. You've been on the Eurobond. Now, what's the upside to the Eurobond? The upside is that you're basically trading a market where, when you're being considered for the platform, you've got the scalability of that system. And the other thing too is, if you have a look at that list, what other strategy there can you see could you add to that system, or that a portfolio to trade with the Eurobond, particularly if you've made $7.5 grand or 7.7. You could easily add in copper. So if you have a look at copper, and this is CT181, I think this is one of Kim's strategies from memory. That is fantastic as well. So you've got 30, not a great win rate, 35%, but have a look at the drawdown, 375. So max drawdown 375, $4,338. Again, not massive numbers, but if you're on a smaller account, just a great little addition. So you've got a couple of systems there, and even crude at F66, and that's another reason why I've added that in. That's at 59%. Crude's volatility is picked right up, so that's really tracking nicely now. And the max drawdown on that strategy is $900, 32 trades. So you're not getting... It's not necessarily an intraday strategy, but more a swing trading strategy. And what's one of the big things with that? What is one of the things that you noticed significantly about this crude strategy? What's one of, if you're looking at systems and you're looking at putting something in that's going to really kind of bump your performance of your system up, strategy, your portfolio up, as far as your overall profit? Not necessarily your net profit, but your trade performance profit. What's one of the big things that you notice there about that strategy? It's obviously not going to trade much, 32 trades, 59%. So you're really in a good space as far as your win rate, because Fortress strategy is a momentum trending strategy, and to have the trend momentum at 59% is fantastic. When the drawdown, the average trade net profit is $344. That's the highest average trade net profit in that list, because System 10 hasn't got data in it. It's only got a couple of trades in there. So if you look at that data, you can see that if I'm putting my systems together, which I'll add this in, S66. So if I basically just add it in, I'll turn some of these off, and we'll just pick in some of the ones that we would trade on the smaller account. So obviously copper would be one of those. We would get rid of SN391. We'll get rid of that. I'm pretty sure that B44 might be one of Chris's as well. So we'll just get rid of some of these strategies, and we'll add in only the ones with a very small drawdown. So we've got, so H is sitting there. No, we need to get rid of H. So copper and crude run us at $1,000 overall drawdown. So there's our copper, there's our crude, and our copper strategy. So what does that tell you? If I've put those two together and my drawdown's $1,000, they're pretty close to. There's a little bit of an overlap in drawdown there, isn't there? Because I would probably be expecting. So could I possibly do better with two systems here? If I'm picking two systems to go in my top 10 portfolio, and I've only got to say a 10 or a 15 or a 20k account, could I do a little bit better with drawdown there? I possibly couldn't I? So I might even try the Eurobond and see where that puts us. So 13, and if we turn off copper, so we'll turn copper back on, and we'll just take out crude for a second. So if I add in copper and the Eurobond, I've basically, what I've done there is I have added in copper and the Eurobond, and that's giving me a max drawdown of $555, and I've got $12,000 worth of profit. So that's not really a bad effort as far as putting systems together that are uncorrelated. So what if you can see where I'm going with this portfolio management? What am I looking to do? If I add in coffee as one of my systems, say I've got a larger account, say I've got a $50,000 account or $100,000. If I do add in coffee that has the larger drawdown, what's one of my goals as a system developer or as a system manager? What's one of my goals for, or one of my key objectives for my portfolio management? If I add in, say, coffee on a larger account, because you've already seen what we've done with the smaller account, with the 10K account, we managed to really knock our drawdown, very, very little drawdown there, and we're still sitting there at $12,000, which is 120% over 10K over the 12 months, or it's only actually 9 months. So what's my goal for coffee if I add that in and take out, say, copper? I really want to try to get a strategy that is scalable, obviously with coffee, but also that will aggressively attack that drawdown. So I want to find out, when did coffee have its max drawdown? And whenever that was, I want to make sure that, so if we have a quick look at coffee here, I'll just bring coffee over so we can kind of view that. Let me just grab that here. And I'll just pull that up. Now I've got coffee's drawdown as 7. On this strategy it's 5, but it is actually 7,000. So that's definitely the drawdown. So 5787. So what am I wanting to do if I'm putting a strategy together? What's one of the key things that I want to find out with my drawdown? I want to find out when that drawdown occurred, don't I? So the 24th of March was when my drawdown occurred. So basically, any strategy that I put together, I really want a strategy that is very, very profitable during that period. If I'm creating a system based around my ability to trade and my ability to track coffee, then I'm going to want a system that is running really well around that period, and that's going to basically bolster my drawdown, because that's where I got hit worst on my drawdown. So if we have a look at our overall performance here, you can see that in March we had a good strong drawdown on coffee. We've had one probably there in February as well. So February and March are my Achilles heel on this system. That's where I really need to go to if I'm going to put a strategy together. And this is how you want to be looking at all of your systems. You want to say, right, well, if I'm trading a commodity, what was the Forex market doing? Or if I'm trading the coffee, what was the Eurobond? What were the indexes doing at this stage? Or what was gold doing? What was gold or crude, I should say, doing? I'm really trying to find a market and a system that will give me buoyancy during this period, so that I can smooth that equity curve out. Because if I can get that as low as possible, then does it matter if I add a strategy in here that it may not, it may be. I mean, this is where we come to seasonality too. Because one of the things, that's a good question, is the drawdown date historically consistent? It possibly won't be. It could be. This is where we have to objectively test it. One of the things that we want to do is, obviously, we want to add in the ability to look at the seasonality of our strategy. I mean, this coffee strategy relies on us being able to move with the seasonality of the market. If the coffee strategy has, which this one does, has a significant performance to the long side, because we know coffee's been rallying, we've got 51k of profit on the long side. So that drawdown may have been because this has been configured more for the long side of the market. So when we get that sell-off, we may need to have a slightly different strategy and have a tight circuit breaker for this strategy if the market gets aggressively short. Because we're not picking up a lot of profit on the short side. We are picking up a bit, but it's not significant. So what do we need to do with, if we talk about the historical performance of this system, what's one of the things that we definitely want to look at as far as this strategy when we do our market profile? Because it's a commodity, what do we want to look at? We want to look at that seasonality. So if you go to seasonalcharts.com, you definitely want to have a look at that to make sure that you're getting the most out of you can map out on your daily charts what's happening with the market, which is what we've spoken about before. So guys, I'm going to just pull that over now, just reinforcing that we need something that's going to kind of give us some weight there. So let's push that over and continue on. Now let me just grab that up, and I'm going to just quickly cover off a couple of the other markets, and then we're going to get stuck into. So again, coffee, but some of the other markets that are performing really well and have been in our top 10. SN312, SN316 is well, another another S&P strategy tracking really well. Again, huge ratio profit to max drawdown. Good average trade net profit. Huge. It's trading over 389 days that it's looked at trading, but only traded 81. So it's not, if the ratio of days traded over the number of the number of trades taken, I'll get it out eventually. It shows you that this is more a swing / filtered strategy. It's not taking too many trades, so you're not going to get a lot of trades, but your average trade net profit will potentially maintain that level. And as long as your win rate's there and the consistency's there with the market, then you're going to find that that really is a good strategy, because you haven't got the frequency of the number of trades. However, when you get a strategy like, say for example, the cycle trader, CTO2, the one thing with the cycle trader you'll find, and if we go to G, you've got to be very careful. If you're running a cycle trader, you can very quickly get into a period where you get that flat, where the market conditions go out of favour for you, and that really very quickly erodes your average trade net profit. As you can see there, last 20 days, negative 325. So you really need to be on the ball with that cycle trader strategies, and they can very quickly, and that's why we say a minimum of an average trade net profit of $50. They can very quickly drop to 33, as that one has. So that to me is one that we would mark as potentially off. It has been good, but obviously it's starting to get exposed to that that not ideal conditions for the cycle trader. So a strategy that we would kind of consider not wanting to trade during more volatile market conditions. Again, the other systems that I like, particularly that are running well, the gold strategy there. So you've got B10, breakout strategy, 49%. $13,000 overall profit. Average trade net profit is 170. Max drawdown 1280. Really good, consistent, has hardly been touched. I think this is one of Chris's actually. And if you pull a strategy up from Dropbox, which obviously that's our systems now. I've just added in that all systems. Let me grab this here. I've just added the top 10 strategies to our a new folder for the review of the top 10 strategies, and those strategies in there are the ones that have been recently reviewed in our top 10. if you look at that strategy, that really hasn't been reviewed for about 3 or 4 months. If you can find a strategy that's still performing and hasn't been had any kind of adjustments or changes to it, that either tells you that the market conditions haven't really changed too much, or the strategy is extremely robust. So we know that gold's had a lot of volatility. It's basically been trading between 1200 and 1350, and it broke 1200 recently. So the volatility's up on gold, and that strategy hasn't been adjusted. So that means that system and strategy is very robust for that market. So it's definitely one of the top ranking strategies for me. So B10, SM312, I would say FT09 as well. Not so much last week or so, but historically that has been a very good performer. 20k. The only downside to that strategy is the drawdown. So 4,500. Ideally, we're trying to hunt for systems that are around about the under 2k, under 1,500 drawdown. That's our ideal benchmark. And you'll find that some of the strategies we're releasing, the Viper, particularly the pivot trader that I'm going to be getting out at the end of this week, that has an excellent reward to risk. So the pivot trader is going to run with about a 3-to-1 reward to risk and up to 5-to-1. So you're risking $100 to make $300 to $500 per trade. So you're going to find that those type of strategies, the MACD trader, the fib trader, the failed trend as well, they're going to really add a lot of weight to your average trade net profit by pushing that reward to risk up. So guys, that's a quick look at our top 10, some of the systems that are running really well. Question from Raj was about the low drawdown but low average trade net profit markets like the Eurobond. Isn't it better than say coffee because we can start at a higher lot size and also scale faster? You can definitely start with going with more lots. So your ability to get more profit out of the market is definitely there because you can add multiple systems and multiple contracts. Whereas you're going to be a little bit more restricted on, say, coffee. And remember too that the more contracts you're adding more risk as well. So with a lower drawdown, even if you're adding more contracts, you're still well within your risk mandate. So that's a massive advantage for markets like the Eurobond, copper, soybeans, and gold, obviously. So something to consider there, and something that I would definitely kind of add into your portfolio. But again, when you go through the program, you're going to basically work out what your process is going to be, whether it's going to be to add systems as you increase your profit or contracts. Because remember that you've got the ability to add multiple systems. Say I'm starting with 50k and I have a $1,000 delta. I might get up to say $52,000, $53,000 and then decide instead of adding a contract I'm going to add another system. And you might do that until your portfolio is up say 20 or 30k till you get to your 10 systems that you're trading and then start adding contracts. So that's all covered in obviously the money management and something that you should kind of work out with your coach. So you'll do that. You do that with your portfolio analysis anyway, so as part of your 12-week challenge. Any questions on that? Yeah. So when you go through your 12-week challenge, your goal is to obviously start with 2 strategies and then build up, but part of the process is working out what your rate of increase is, whether it's going to be systems or contracts.